I'm Cathy Yang, your intel in the Philippine markets and the economy. In the headlines, hopes on high. The Philippines eyes a U.S. trade deal as President Bongbong Marcos is set to meet with U.S. President Donald Trump. As part of the negotiations, Finance Chief Ralph Recto says the Philippines is open to lowering duties on U.S. goods. Amid the uncertainty, the Philippine Stock Exchange Index slips below 6,300 and the peso weakens to the 57 level to the dollar. Where to next on risk appetites with Peter Bernatze of Unicapital Securities and Mike Enriquez of Sun Life Investment Management and Trust Corp. Philippine President Bongbong Marcos has arrived in the
Priority for this visit is to push for greater economic engagement, particularly through trade and investment between the Philippines and the United States. I intend to convey to President Trump and his cabinet officials that the Philippines is ready to negotiate a bilateral trade deal that will ensure strong, mutually beneficial, and future-oriented collaborations that only the United States and the Philippines will be able to take advantage of.
That's still very far in the sense that we have to get over this particular discussion first on the tariff. After that, we're hoping that the free trade agreement would probably come into play. If you remember, during the first administration, there was already conversations surrounding the FTA, and we were in the process of actually going in that direction. But that changed, obviously, with the new administration.
Accompanying Marcos in his U.S. visit are Trade Secretary Cristina Roque and Economic Czar Frederick Go, as well as Defense Secretary Gilbert Teodoro, Foreign Affairs Chief Maria Teresa Lazaro, and PCO Head Dave Gomez. The Bangko Sentral Finance Department earlier estimated this could affect nearly $2 billion of the projected $36.5 billion in U.S. remittances. The Philippine Stock Exchange trajectory. This, Acaba says, follows an upside swing from an interim consolidation, during which the pair also reclaimed its position above the key good to have you back, Peter. Welcome to the program.
Hi, Cathy. Thanks for having us.
So what do you make of the institutional selling going on now with SM Investments and SM Prime Holdings?
Right. Yeah. SM and SMPH are heavyweight index names and have been dragging the index in the past few days, as we have seen. And it is partly driven by the sizable discounted block sale. And we think that this block sale is due to a more of like a portfolio or calibration of an institutional fund, which could possibly be due to the lingering macro risk and underperformance of our currency.
Might that continue with other institutional investors? I mean, what's the feeling in the markets?
Yeah, I think it's just this particular fund lessening or limiting its exposure in the emerging markets or in the Philippines, and we can only hope that no one will follow suit.
Right, hope floats then. Well, how do you think the markets will position ahead of any news coming out from DC with Marcos meeting Trump?
Yeah, I think we're anticipating a range-bound trading in the local bourse, at least this week, amid lack of strong catalyst. But it might also take its cue from the developments arising from the Trump-Marcos meeting, as slated July 2020 to 22. So I think in terms of expectations, as mentioned by the President Marcos, a mutually beneficial trade deal is of course better for the Philippines. And we think that thinking win-win is the way forward in this particular deal. Instead of just exchanging, trade concessions, both countries could look for more collaborative opportunities to expand the overall value of our economic relationship. Maybe we can lower down tariffs on some items, as Secretary Recto suggested, like animal feeds and some agri-products, which are our top imports from U.S. But in return, we need the U.S. to also integrate, the Philippine industries in their supply chain to complement strategic local industries like, for example, semiconductor, mining, BPO services. And I think the key to negotiation is not really taking a bigger portion of the pie, rather, making the pie bigger, which is a win-win agreement for both countries.
So win-win is just one scenario, but what are the other scenarios that we can draw up from negotiations?
Well, I think if we can't really lower down the tariffs, we stay with the 20% tariffs that is being imposed to us by President Trump, I think we can still benefit from trade diversion here from companies relocating from China and Taiwan. On the ground, what we hear from companies is that they are getting increase already, from companies from Taiwan and China, those who want to relocate in the Philippines. And I think we can still benefit, but we have to maintain our edge here in the Philippines.
And because of that uncertainty about whether we maintain that edge, there's this correlation we're now seeing between the peso and the direction in local stocks. Of late, we've seen a weakening of the peso versus the dollar and also a weakening in the Philippine Stock Exchange Index.
Yeah, exactly. I think it's also the weakening of the peso is also attributable to the strengthening of the dollar, and this is particularly driven by the expectations that the Fed might pause in their next interest rate decision coming this end of the month.
Okay, what about the Fed futures pricing? Because it's less than 25 basis point of a rate cut for the rest of this year because of the better U.S. data that we got on retail sales and jobless claims. So what now on the monetary policy side and how the Banco Central may decide next month?
I think the expectations of the market currently is for the Fed to keep interest rate. Although there are some Fed officials who have dissenting opinion on this, they want interest rate to be lowered in the next Fed meeting. However, I think given that inflation was still on a increasing trajectory, as we've seen in the latest CPI number of the U.S., we think that the Fed would keep interest rates in their next meeting, and also it will again influence the BSP's interest rate trajectory as well.
So what does that mean? The BSP staying on hold, or could it decouple as it has over the past couple of meetings?
I think the BSP has room to decouple, given relatively the peso has been stronger than last year, and also the growth of the Philippine economy has been subdued, given the first quarter GDP has been subdued. So I think the BSP would there's room for the BSP to cut interest rates, although they have to also balance it out, given that any cut in interest rates would also spill over to the currency.
That's so true, and also on how people spend. How do you see moves towards stricter rules or an outright ban in online gambling impacting the gaming counters listed at the PSC?
Yeah, maybe some points on online gambling. I think we have to understand that on an economic standpoint, gambling is a form of entertainment, but it has spillover effects. That is, it imposes societal costs such as reduced productivity or financial instability. But just like any other sin goods, like alcohol and tobacco, a total ban might not work, as it may not really eliminate gambling. It would just push operators underground into the black market, which is more dangerous and harder to monitor. I think many are calling for stricter regulation when it comes to online gambling, and it can follow a similar model like alcohol or tobacco.
Okay, let's get down to earnings before we go. Earnings season once again, and BPI's reported last Friday. What do you make of the earnings so far and what it could say about the local banking industry in the first half?
Yeah, I think for BPI, it has reported its first half earnings, and actually it came in line with our expectations. And I think the growth was really attributable to the double-digit rise in net interest income and high single-digit expansion of its non-interest income on the back of strong fee income from credit cards, insurance, and wealth management. And for the banking sector as a whole, we do still see growth in the next second half of the year, while we expect interest rate cuts to potentially, drag its net interest income. This could be well supported by the growth in loan volume, especially as the BSP has already reduced the reserve requirement ratio and plans to further reduce it down.
Got that. Thank you so much for setting us up for the week. Peter Garnace of Unicapital Securities Inc. joining us.
Thank you so much, Ken.
UG Plus Interactive. to 60 pesos. Bloomberry, which operates integrated resorts in the Philippines, also saw gains, closing last Friday 10.4% higher at 445 pesos. Market prices may have since adjusted with the ongoing trading, as you can see. And you're watching Money Talks. Coming right up, Mike Enriquez of Sun Life Investment talks about long-term investment for Filipinos. And the country's external debt service burden rose to nearly $5 billion by the end of April. Keep it here on One News. Our next guest aims to have more Filipinos
Morning, Cathy.
All right, so congratulations in order, marking your 4th anniversary this month. You started operations on July 28th.
Yes, that's correct. And we're already 4 years this July 26th. So I think over the last 4 years, we have really increased our assets under management, of course, driven by our anchor client, our insurance business.
You have indeed, and I'm keeping watch of what you said. You'd be on track to reaching 450 billion AUM by the end of this year. Is that still on track, despite the global policy uncertainties and slowing local growth?
We are still very bullish on that. We're on track. Well, I think the only detractor would be where the equity market levels will be at the end of the year, because it comprises a big chunk of our portfolio. But I think the biggest driver for this year would be the launch of our retail unit investment trust funds, which we're quite excited about.
Right, but as you said, it is a marker, the PSEI, and where it ends this year. What are you targeting? As a couple of stock brokerages already lowered their forecasts for the second half.
We are, our house view would be about 6,900 for this year. So there's still a big room for it to move higher from where it is currently, especially now as we've experienced a recent correction from last week.
Right, so if you keep it at 6,900, then you're well on your way to 450 B AUM. But which investment solutions are driving growth? Is it the investment management accounts, corporate trust accounts, retirement fund accounts, pre-need accounts, and you even have the unit investment trust funds, as you mentioned?
Yes, for us, the biggest contributor will still be the growth of the AUM coming from the insurance portfolios. We also manage our mutual fund business. Right now, we're quite keen on really building this unit investment trust fund business from retail, and we're excited that we're launching some new fund strategies, both local and offshore fund strategies, which I think would be a good driver for increased AUM for the rest of the year.
It's really a balancing act that you have to do. How are you now balancing that then, growing the retail investments through the UTIFs while maintaining the strong relationships that you've got with the institutionals and the high net worth clients?
Well, for us, it complements the existing business that we have currently, because our main distributor would be our financial advisors as well, in terms of how we would penetrate our existing insurance clients, complementing them with investment products and vice versa. So I think this would definitely help us build fast our AUM growth, especially for some of the institutional markets right now. We've been getting a lot of increase on retirement fund mandates, which I think is something quite nice, because these are more resilient and long-term clients who would like to look at our services for what do you call this, retirement fund mandates.
Yeah, let's pick up on the retirement funds. CIMEPA's given us a pause for thought, lowering stock transaction taxes on the one hand, and at the same time levying 20% tax on the interest earned for long-term deposits. What are your clients' key concerns, and how are you advising them these days?
I think the biggest effect would be for the ones who previously enjoyed long-term deposits, the ones that are more than 5 years. Previously, the interest is not subject to withholding taxes. Now it's subject to withholding taxes. But I think most of the clients that we handle buy government securities and corporate bonds, which ever since they've been subjected to the 20% withholding tax and interest payments. I think what they're excited about would be more on the lower friction costs on equity trading, especially for the UITFs and the mutual funds that we manage. I think the CIMEPA law has helped us lower friction costs for both, because number one, at least it's now clarified that both UITFs and mutual funds are not subject to DST. And if the equity-centric funds will be subjected to lower sales taxes, which definitely would help boost income for our investors.
So that's what you're recommending right now, that they could consider the other universe of assets that weren't considered before because of the DSTs and the stock transaction taxes. Our last conversation 2 months ago, you made a mention of the preference for fixed income as core holdings. Does that still stand? I mean, where are equities now in your universe of assets?
Yes, fixed income will continue to be a core holding, especially for investors who would like to balance off volatility of the equity markets and the risk taking um, for the equity market. Right now, what our investors are looking at would be certainty of their principal, and then a little bit of risk taking, investing in both local and offshore equity markets. And we've seen, as you've mentioned, S&P and Nasdaq have hit all-time highs every day for the last week. So I think there is also that angle that investors should also look at diversifying, not only from fixed income to equities, but also to dollar assets, especially global funds.
And keeping that principle intact, very important. Mike, thank you so much for your insights. Appreciate it. Mike Enriquez of Sun Life Investment Management and Trust Corp.
Thanks.
And in sports, a rematch could be on the horizon after Manny Pacquiao and Mario Barrios fought to a majority draw in the WBC welterweight title bout. Both fighters signaled interest in running it back, with Pacquiao saying he'd like a rematch to make the Filipino people proud. Barrios, who retained his belt, echoed the sentiment, saying it will be a huge for boxing. 46-year-old Pacquiao, returning after a 4-year hiatus, fell short of becoming the oldest welterweight champion, but showed flashes of his old form. He praised Barrios as a tough opponent and said he hopes his comeback inspires other fighters. And have a great day ahead.